We always talk to people about what they actually feel like they need, but then I always offer a different solution just to say, look, that's actually not what Dashdot does. So are you open to learning about what we potentially can do to get you to your goals using our methods? Because some people might specifically say, I want cash flow right now, but I want to have a portfolio worth 10 million in 15 years. And you're like, okay, well, if you're specifically aiming for a cash flow orientated property now, based on what your finances are and your borrowing capacity, I don't think that's actually going to be the best solution for you. So I always make sure it's clear, are you open to learning a different way for the client? And if they are, fantastic, we can dig into a little bit more about how we can help them. A lot of people aren't, they're quite set in their ways. So my job is to then try and figure out, can we actually help them get to what they want to do using their method? And unfortunately, a lot of the time we can't.
Hello and welcome. You're listening to Dashdot Insider, the auditory epicenter for passionate property investors seeking a life of freedom, choice, and abundance. Joining me today, David Villaume. David is one of our advisors here at Dashdot, and one of the key things that we really want to do is kind of share a little bit about what the client journey can be like so that people know what to expect. And that might be for if you're thinking about Dashdot, it might be if you're thinking about dealing with a buyer's agency at all. It might just be to do with how you're feeling, what you're thinking about when it comes time to really assess whether or not you want to be in the property game or not. So David has a wealth of experience. But first up, how are you feeling, David?
Yeah, I'm good, thanks, Emil. So it's good to be here. This is the first time I've been on the podcast too. So pretty excited about trying to create a little bit of clarity around what we obviously do here at Dashdot to assist people, making a decision about coming on board.
Brilliant. Well, on that note, I have heard it mentioned many, many times that the advisors essentially play the role of a kind of doctor in trying to assess people's needs. Can you kind of explain to us a little bit about what that means?
Yeah, so when I've been with Dashdot since February 2023. So when I first came on board, Goose was always into, Dave, your role is a bit like being a doctor with everybody. You need to chat to people about what their needs and requirements are. So for instance, if you're a doctor and somebody comes in and they're sick, so say I'm sick, I've got a bit of a stomach complaint, Emil, as the doctor, isn't going to then just sit there and go, okay, great, well, I think you've got this. They're going to ask lots and lots of questions to try and get that correct diagnosis for you so that then it can be treated. You can either get some medication or you can go away and try and figure out what's actually required to get yourself healthy. So that's what we do, but with property. So people come to us saying, yeah, I want to achieve this. I want to get to 100,000 passive income. I want to do this. So we will ask lots and lots of questions to try and diagnose and figure out how we're actually going to help you get there. What do you actually need? Because some people don't know what they need. They don't understand what's achievable. They don't actually understand how they're going to get to those goals. So we do as many questions and digging in as much as we can to that specific person's needs and requirements to give them the correct diagnosis. So we prescribe them a solution. This is how Dashdot can help you.
How different are the possible solutions?
The possible solutions, well, it's endless because every single every single person that we talk to is going to be different. And we have to try and tailor that out to exactly what that person needs. So whether it be, I'd like a portfolio that's $10 million. It's like, great, this is what we need to do now to start you on that journey. We need to figure out what's going to be the best thing. And importantly, we also need to figure out why you actually want that. Why is that important to you?
All right, you've given me a couple of really good leads here that I want to follow up on. First of all, my question is sort of a lot of people just think, right, well, if you want $10 million in your portfolio, then start accumulating properties. And someone else might say, I want 5 million. Would they roughly be having pretty much the same strategy if their goals are just, I want to have a big portfolio? And or how different can they be depending on people's individual situations?
Yeah, it's always going to be tailored to that person because somebody might come to us with 500,000 in cash. They might have a borrowing capacity of like 3 or 4 million. Whereas other people might have 100,000 in cash with a borrowing capacity of 4 to 500,000. So we need to try and figure out based on what their finances are, based on what they want to achieve, what is the most optimal way to get you to their goals? Because people have different savings rates, all these sorts of things that affect how we can build their portfolio out. So we need to dig into that for every single person that comes on board and wants to actually learn about it, to figure out how we're going to do this for this client.
Are there any really, really common goals that pop up that most people listening to this are sort of like, yeah, that's sort of what I want? A good example of this is when polled, when people are asked how much they would like to earn. Let's say they have a job, a normal 9-to-5 job. When asked how much would be their dream salary or whatever, the vast majority of people have the same answer, and it's double what I'm making now. That seems to be like across the board. If you were to go to 100 different people in Sydney and say, right, what's your salary at the moment? What's your dream salary? What would be like amazing for you? That number just seems to pop up again and again. When we're looking at people building a property portfolio or what people want to get from it, are there sort of like super common trends in what people are trying to achieve?
Yeah, a lot of people want to get to about 2,000 a week. So passive income of about 120,000 seems to be a bit of a common theme. But again, that's going to depend on, do they actually have their own principal place of residence that they're trying to pay off? Or is that already being paid off? Because we need to factor in, okay, what are your finances going to be like in 10 to 15 years when you want to achieve these goals? Can that be a realistic number? Can we get you there?
And roughly how big is a portfolio going to need to be in order for people to achieve that, the couple of grand, $2,000 a week passive income?
Yeah. So to build a portfolio of around 120,000, you'd probably need a portfolio of around 6 to 7 million. Now that's total portfolio value. So that's the amount of debt plus the equity. And it's usually the one thing that you need just a little bit of time for all those to mature so that you can start creating that income. And on average, it'll probably take the average client around 10 to 12 years to get to that figure. But like I said, everyone's going to be different. Some people...
That's the caveat for this episode, right? We're going to be talking in some generalities to try to help people understand and help all of our listeners, all you listening out there, how we can achieve these sorts of things. But the big caveat that overrides everything that we talk about today is your situation is unique and you're going to need expert advice. Because if your goal is somewhat different, or not necessarily the goal, but if your individual circumstances are different, the way that you're going to get to the top of the mountain, you're going to need to take a different route. And I think that is something that's very, very overlooked in the marketplace by most sort of casual, what I would call casual investors, people that haven't sought professional advice. It's just like property works. I understand property works. A lot of people have educated themselves around the notion of property as an asset class. And it's like, well, yeah, if you want to get wealthy, it's pretty straightforward. The banks, the governments, they basically create wealth. They create money. That money then gets exchanged for wealth, and it all ends up, well, a massive proportion of it ends up in the property market. So if you want to get wealthy, you need to be investing in asset classes that are going to outpace inflation by some distance. Property has very comfortably the best risk-adjusted return, and a lot of people understand this now, right? We've been working very, very hard to explain to people why the property market basically can't fail, because you have the banks and the government both very, very heavily incentivized to make sure that property continues to work as well as it has in the past. So a lot of people understand this now, and they're like, yeah, I understand property, that's great. But they don't necessarily understand where they are at in their property journey. Like, they might understand, well, I don't have any properties, but they don't understand what their genuine starting point is in relation to what's possible and how long it's going to take. So in your experience, how do you balance offering? This will be a tricky question for you, but we'll see how we go.
I'll do my best.
It's the difference between what potential property investors want and what they need. So what they want is what they think they need versus what our modeling and everything shows that they actually need. How often do we sort of like bump up against that?
Well, we always talk to people about what they actually feel like they need. But then I always offer a different solution just to say, look, that's actually not what Dashdot does. So are you open to learning about what we potentially can do to get you to your goals using our methods? Because some people might specifically say, I want cash flow right now, but I want to have a portfolio worth 10 million in 15 years. And you're like, okay, well, if you're specifically aiming for a cash flow orientated property now, based on what your finances are and your borrowing capacity, I don't think that's actually going to be the best solution for you. So I always make sure it's clear, are you open to learning a different way for the client? And if they are, fantastic, we can dig into a little bit more about how we can help them. A lot of people aren't. They're quite set in their ways. So my job is to then try and figure out, can we actually help them get to what they want to do using their method? And unfortunately, a lot of the time we can't.
Right. And so it's probably worth mentioning again, it's a very, very robust idea. The theory of constraints. Most people are constrained by, well, when it comes time to acquire a property, you need three things. You need capital, cash flow, and credit, right? So you need to have some money coming in. You need to have some equity somewhere, whether that's cash in the bank or equity in an existing property. And you need to have the ability for a bank to lend against you. So you haven't had to declare bankruptcy recently, or there isn't postcode sensitivity that kills the deal if it's in a flood zone or something like that. Or close to bushfire risks and things like that. So when we look at that theory of constraints, that really does become sort of key. Is that important in the diagnostic process when you're trying to work out, right, how are we going to get from here to there?
Absolutely, because every single time you purchase a property, it actually causes a problem. And then we also need to try and solve a potential problem that's going to happen maybe in the next year or two. Because if someone says they've only got 100,000 in cash, that's all they've got no equity, they've got great borrowing capacity and they've got great savings, but they've only got that capital constraint at the start, that's the first problem we need to solve. To get you to build your portfolio out, we need to sit there and go, right, this is what we actually recommend you do. Go for a growth-orientated property, because then that will then start creating some equity from that property to build your portfolio out without you having to save for another deposit.
Right. So what you said there, when you buy a property, you create a problem, because the theory of constraints saying the three C's, right? Cash flow, credit, and capital. If you buy a property, you're going to be using up at least a decent amount of capital, right? And so we need to make sure that that property is going to solve that problem in a very, very short space of time so that you can go again. Or if it's
as quick as you can.
Negatively geared. Yeah. What's that, sorry?
As quick as you can. That's the whole idea. You want to build it in an optimal way so that you can get to your goals as quick as you can. Instead of it being a 20 or 30-year timeline, let's try and push it and get it done as quick as we can.
Okay. And you've talked about, well, I've heard a lot of advisors talk about the emotional aspect of property investment versus a more kind of numbers-driven approach. What do you kind of encounter from people who are looking at investing in property in terms of like where their mindset is, and how are people kind of looking at property? And how would you recommend people sort of, if they need to alter their perspective, maybe take a different angle on it?
Yeah, because I always think it comes down to the emotional side or the numbers side. So it depends what kind of personality you are. But for most people, it's an emotional thing. They want to invest in property because they haven't got something in their life, whether it's the passive income they want, whether it's the chance to be able to do some extra travel, whether it's a chance to spend some more time with your kids or even grandkids in the future. So this is what we need to discuss with people. So we need to go through those emotions to figure out, okay, this is what you need to do. What's it actually going to mean to you if you don't do it? If you don't get to that passive income goal to be able to spend some time with your grandkids, do you feel that's going to be a bad thing, or is that a good thing for you? It's going to be a bad thing, of course. So we need to figure these things out with you. A lot of people are focused primarily on numbers. And a lot of the time that's because they don't actually know what they want to achieve through property. They don't actually think, oh, I just want to get to this goal. I just want to make sure I've got a financial freedom. So that's all well and good, but what does financial freedom mean for you? It means that the numbers say this. It means that I'm earning this. It means I'm earning more than what I'm spending. So great. So let's map that out for you. What does that look like for you? What's financial freedom mean for you by the numbers?
Okay. Having a look then at the people that we're able to help, right? Clients come to us, they want a solution, we're able to map things out. What kind of, is there And it's totally fine if there isn't like a general answer for this. And of course, with our caveat override on the entire episode, if you're listening to this, it will depend on your individual situation. What sort of time frame are people generally looking at to hit that sort of goal?
We get a lot of clients around 10 to 15 years. That's their main time frame. So 10 years, you can realistically make a lot of changes and build quite a good portfolio around that time. But it's always going to come down to what you actually want to achieve as your end goal. Because if your end goal is like, I need 50K cash flow, passive income, and that's it, that's all I need, it's like, cool, we can structure that easily, figure this out. We'll get you there easily. Some people might have a $250,000 to $300,000 goal. They might have some constraints right now. So that might take 15 to 20 years to get them there.
Speaking of constraints and the timeframes, it is interesting that just constantly seems to pop up. From when you really start to get in, when you start to get into the property game, you are looking at about 10 years. And that seems to be regardless of whether or not people are in their 20s, in their 30s, or in their 40s. Because when they're in their 20s, they might be single, so they don't have lots of dependents. And so they might be able to live with their parents. They might be able to rent vest. And so they can save. So cash flow can be pretty decent. They can build up the equity. They can get into a property. That property grows. They can get into the next one. They can get into the next one. And we've spoken to, we had Frank on the podcast recently as well, one of our own here at Dashdot. When you're young, you can sort of accumulate, you go through this nice little patch of being able to accumulate properties. Once you get married, then that can be even better because suddenly you've got two incomes and no kids. And so that's when people can really go into overdrive. But then once you start having children, the cash flow, the way all of that gets assessed changes. But usually by the time you're hitting that age, people's salaries are starting to kick up a fair bit. And so that can kind of offset things. So this journey, it doesn't necessarily matter. Like if you're in your 30s and you think, oh, I've missed the boat, it's probably not the case at all. And even some people who are in their 20s, okay, they might accumulate a really nice looking portfolio, right? They might be able to get 3, 4, 5 properties over the course of 3 or 4 years. But then they do sort of have to wait for all of the growth to happen. And that can normally take, one doubling cycle, maybe a little bit more than that. So you're normally looking at about a decade. But it's also, I would probably consider it a pretty low stress decade. Right? Like the equity's building, you're not nervous about cash flow, especially in this climate at the moment, right? You're not nervous about all of these other things. You're just sort of looking at I've spoken to a lot of clients recently appearing on the podcast who are all sort of saying, the lack of stress after you get that first one under your belt and start moving forward, it's a really, really amazing feeling. What are some of the objections that you hear from people where you're thinking, look, the goalposts are just there. Here's how you can get there. But for some reason, people don't tend to move forward.
I mean, there's the common objections could be something simple around, my partner's not on board. It's like, okay, what do you mean by your partner's not on board? Oh, look, they don't really understand everything. It's like, okay, great. So do you think it'd be a really good opportunity for me to actually speak to your partner to create a bit of clarity around it? Because there's nearly always one person, if you're in a relationship, obviously, there's nearly always one person that is actually driving the conversation towards property investment. Some people's partners are just like, look, whatever you decide, I'm happy with it. It's like, great, that's easy. That we can talk to you through that sort of thing. But for the people whose partner's not on board with it, that's always going to be a difficult conversation because you in the back of our mind, we're thinking, okay, they don't want to invest in property because it's nearly always fear-based. And then there's the person who does want to invest in property. Why do they want to invest in property? Is there something missing in their life? Because you always have to sit there thinking you're in a partnership. The person who doesn't want to invest nearly always wins this argument. Why is that? Why don't they want to support their partner who wants to invest in property? Take a chance on them.
Yeah, I heard an interesting comment from one of our clients recently. She said, for her, it felt like just a switch. Suddenly, it was like, yep, I'm into property now. Went from not that interested, maybe a little bit curious. And then suddenly it was like, I have to. And it came down to the level of education, right? The level of understanding, because it's difficult to get someone to invest in something that they don't understand, right? That's why crypto is like, my father is in his 70s now. He's not going to buy crypto. He doesn't understand it. Right? He has no chance. I don't even think he has a mobile phone these days, or if he does, it's not a smartphone. It's
He's one of those, is he?
Yeah, with the big thumbs. It's got the big buttons for old people,
yeah.
and put the glasses on, and all of that sort of thing. So it's very difficult to invest in something that you don't understand. And the level of education, the number of people that I've spoken to from hosting these podcasts who've said it all came down to the education. Once I understand the rules of the game and see it all sort of mapped out, then it all makes sense and it's easy. But one of our clients in particular, she said something really interesting. She said it was that transition, that little flip. It came when the fear of investing in property was less than the fear of not investing in property. For her, it was a realization that, okay, signing a bunch of documents, getting all of this debt, right? Which in her case wasn't a huge amount, but for her, obviously, it was, right? Because first investment property, it's often the biggest purchase that people are making, unless sometimes they have their principal place of residence already. So maybe it's the second biggest purchase that they've ever made up till that point. It's a big deal. And so there's anxiety, there's fear around it and things like that. But it's when you sort of map out, well, this is where you can get to in 10 years. This is where you can get to in 12 years. Or if you've got really, really big goals, it might be 15, depending on your starting position and what you want to achieve. If you don't invest in property, how on earth are you going to get there? And we've spoken to so many people these days who are just looking at their borrowing capacity and having a look at, right, well, I want to get this sort of property, right? And I was talking to yet another, this was a friend, not a client, and they had their eye on a dream home that would be sort of $850K. Double income, no kids, doing really well, very happy with everything, good, peaceful life, no complications, anything like that, good family situation, everything's good, right? Like dream situation that you could imagine. Double income, no kids in their 20s. Looking at a property for about $850. They can't quite get the borrowing because one of the constraints has kicked in. And so now they're trying to save more cash to get into it. It's like the property price is increasing faster than people on a combined income of 200K can save in the current climate at the moment. And once people kind of realize that, for her, the fear really kicked in. It's like, I have to find a way. I've got to find a way of doing this because I can't save my way into getting into that property. There's just no way that can happen. So the alternative is to go and at least be in the property market, maybe not at that price point, but let's start a bit smaller. Let's get a $300,000, $400,000, or more likely in today's market, a $450,000, $500,000, $550,000 property where they will be able to get the lending. 6 months later, 12 months later, there's enough equity growth, get another one, accumulate the wealth that way, and then kick into getting the big dream house down the line. But the simple fact that even with absolutely everything going for them, with a combined income, they're still falling further and further and further behind if all they do is save. And that, I think, is pretty terrifying for most people. And the fear of getting left behind that way, I think for a lot of people these days, is starting to outweigh the fear of, let's sign some documents and get a decent-sized mortgage. That's kind of the way I see it. But you're sort of boots on the ground. You've got a...
absolutely, mate. And the fear base is what drives a lot of people to get in contact with us because they're like, oh, geez, how am I going to get there? How am I actually going to get to what I goal? Because people, when we talk to people about things and we try and figure out exactly what they want, it's always people, are they moving away from a fear or are they moving towards something that they want to achieve? Because a lot of people, my job at Dashdot in particular is to go through and figure out how can we actually help you get to where you want to go. So if you've got some fears in there, we need to bring that out in the open and discuss it so that we can address it and figure out what's the best way to move you forward.
In the vast majority of cases, is there a solution for people?
Oh,
Is there a way
absolutely.
that they can do it?
Yeah, absolutely. There's always going to be a solution for people if they're open to learning about how we can go about things at Dashdot.
Right. I think that's
Yeah.
really key. The
Yeah.
open-mindedness of it is really, really key. The number of strong beliefs that a lot of people who even work at Dashdot now had before working at Dashdot, and then it's sort of like, well,
that's
have a
right.
look at the data, have a look at the number of people that we've sort of talked to in our meetings who say things like, oh yeah, I used to think this, but I've seen all the data, I've seen the results we're getting for everyone, and this seems like it's a far better way. Any memorable experiences with clients where you have been able to map something out and their journey, anything that's made sort of anyone in particular stand out?
I've got so many, but I'm obviously not going to go into what their names are and stuff with the privacy and those sorts of things. But I can still remember a client that I assisted in coming on board with us back in, it would have been May 2023. He's now purchased his fourth property. So to be able to purchase 4 properties in the space of about 16 months, it's just been so good to see, because I get the alerts pop up just saying this person has just settled on their next property. And in the back of my mind, I'm sitting there thinking, far out, I actually helped him make the decision to start and give him confidence to say, we can help you get to where you want to go. But it's not always about the number of properties people purchase as well. It's just about the relationships that you build up. I know some of the people that have come on board with us, they've just got the one property, and yet I can still talk to them and just say, hey, how's this going? Wow, I've just seen your latest portfolio health check. It's completely blown my mind. That's gone up like 17% in the last 9 months or something. So I can see that side of them just going, wow, this is unbelievable. I can't believe this has happened. Thank you for assisting us to make that decision. Because that's all I want to do. It's all I want to do with all the clients, is get them to the point where they can confidently go, yeah, Dashdot is actually a great fit. Let's do it. Or no, Dashdot's not a good fit. That's all I need to do. So to see the results, it's amazing. It's amazing.
Property does seem to be a little bit of a silver bullet at the moment. Like with the way the economy is, immigration, the mass numbers of migration, 750,000 people coming in, the massive constraint that we have on supply. We've got issues around units, issues around detached dwellings, meaning that there just aren't enough being built for the influx of people that we're having. We've got record levels, like the amount of monetary expansion. There's that much more money being pumped into the economy at the moment as well. We've got cost of living. We've got all of these different things, like vacancy rates as well, below 1%. Normally a stressed market is between 3 and 5. We got some places like Brisbane where it's sort of hovering around 1, or most suburbs are below 1%. So we have all of these things that are really sort of driving the property market. And in a sense, it is a silver bullet, but it's sort of, I don't know how far the analogy expands, but it sort of depends where you point the thing as well, right? Because there are so many different ways of getting into the property market, and having a tailored approach is absolutely crucial. Because if it's just like, oh, yeah, I'll buy that property around the corner because I know the area or something like that. I mean, this is one of the biggest myths that we tend to shatter fairly regularly at Dashdot with the advent of borderless investing, where so many people now are investing interstate and getting massive results from it. So that's something that I think the internet pretty much, and the amount of data that is available, or that's available for us to trawl through and find out where the better suburbs are going to be. We just got some results through that sort of compared regional areas and the greater capital cities. So greater capital city areas, sort of Greater Sydney would be one of those, right? So you have a look at the greater capital cities, and they've had a certain amount of growth. You have a look at the regional areas, they've had a certain amount of growth. And Dashdot was outpacing by 10% the suburbs that we're able to isolate, because we can get so much of the data and then tailor and execute plans for people that mean that they can get pretty phenomenal results, like to outperform the general property market by 10% in the greater capital cities, to outperform the general property market by that much. That's pretty remarkable. And I think, obviously you get the fun of getting to see people achieve that, which must be pretty awesome.
Yeah, it's one of the best feelings. I mean, it's one reason why I actually enjoy doing this, because I genuinely feel like I'm helping people make a decision that's going to improve their lifestyle and get to their goals in the long term. Because some people just can't afford to buy property. They just, like you said before, they feel like they're priced out. They've got all these fears around, I'm never going to be able to do this. I just can't save quick enough. All these sorts of things. It's like the property market's just going to keep growing. So get yourself in now.
Yeah, I think they're right that the property market is going to keep on growing. I can't see anything that would stop it at the moment. It's very difficult to imagine something that's suddenly going to stop the market continuing to go up and up and up. Like, even if we have another COVID or something like that, people will just be looking at stuff online and purchasing sight unseen in a way that people have become accustomed to doing at the moment. So I can't see even something like that probably wouldn't be able to hold back the property market from where it's going. So I guess the big lesson from this episode is, one, you need a tailored plan. Going out and just following rules of thumb that may have worked 5-10 years ago, but these days the market is so much more nuanced, and getting the right properties that are going to set you up so that you can achieve your goals in 10, 12, 15, maybe longer if you're super ambitious, if you want to have super abundance or something like that. But at least getting that tailored plan so that you can achieve it is going to be really, really vital. And the fear of getting into property, I think, is going to become less and less and less relative to the fear of never being able to get into property, which I think is becoming sort of more and more front of mind for people.
Yeah, what's going to be more fearful as well, Emil? So what's going to be more fearful? Is it the fear of not purchasing property, or is it going to be a bigger fear of not getting to their goals?
Yeah. Because property is just a vehicle, right?
Yeah, that's right. It's like we focus on outcomes. How are we going to get you to your outcome?
I understand. Awesome. All right. Well, on that note, Dave, thank you very much. It's been a very, very enlightening podcast, and I think it's been very useful for everyone listening to get an idea of sort of what the real objective is, right? If property is just a vehicle to create the freedom that people want and to achieve your goals so that you don't have to be stressed about cash and that sort of thing, getting a tailored plan is probably the very first step to take. Well, thank you very much. And it's been an awesome episode.
Yeah, it's been my pleasure. It's been fun. I really hope that people can take a little bit out of these sorts of podcasts, try and figure out, actually, I don't know how I'm going to get to my goals. It's like, just give us a call. Like, we're happy to go through and chat through things. That's what the team's here for. That's what I'm here for.
Yeah. And essentially, we're just here to let you know how you might be able to go about it. Whether or not Dashdot's involved, that's a different decision. But at least you'll have the right information so that you can make the best decisions for yourself moving forward.
Yep, and that's what it's all about.
Yeah, awesome. All right. Thank you very much. And to everyone listening, we hope that you'll tune in for the next episode. Thanks. Bye.